Are you tired of not having enough money to invest in real estate or move into your own single-family home? Why wait? Today, we are going to talk about creative financing and how you can use 2 strategies to buy real estate with $0 down. My name is Tom Santella, and I am the go-to realtor in Brooklyn and Long Island, New York, and I advise my clients on how to utilize both these strategies all the time. What are they, you might ask? Well, in this video, we will be diving into how to buy real estate with both subject to and seller financing. To get right into it, we can start with subject to, or subto, and this is when you take over someone's existing mortgage in exchange for the deed of their property. So, you are buying the property subject to their existing mortgage. Check out this example. Here's the seller in the house. The house has a mortgage and it also has a deed, the receipt of ownership, 2 separate documents. You offer to take over the mortgage payment and the mortgage stays in their name. The seller moves out of the house, the deed gets transferred to you, the buyer, through a title company, and you become the official owner. You can get a tenant to move in and make payments on your behalf, and hopefully you make some money on top. Or you can use this to buy primary residence for yourself as well. So, why is this a neat way to buy real estate, whether you are investing or buying your primary residence? To start, you won't get your credit checked, your credentials, so that means no tax returns, pay stubs, or proof of W-2, and a lot of times you don't need cash, since you're assuming monthly payments. So, where most people use a bank to get a mortgage and buy real estate, they need to jump over all of these hurdles to get approved for a loan that usually only covers 80% of the purchase if you're doing 20% down, which most of the time is conventional loans. With Sub 2, you can get around this by negotiating directly with the seller. Now, they do want some type of down payment, and this would usually be to pay for the equity they might have accumulated in the property during their time of ownership. This is where the term creative financing has become so popular in recent years, and you can utilize seller financing to pay for the rest, so you aren't using cash at the table. Seller financing is when you have the seller finance the purchase of a property or some of it at agreed upon terms like the interest rate, the lending period, and potentially scheduled payoff dates. It is called creative financing because you can arrange any type of agreement between you and the seller that you so choose, as long as you both are happy with the terms and you're able to make the payments each month. When it comes to buying real estate, you can choose to use only one of these strategies or a combination of these strategies, and this largely depends on the type of deal being considered and what the seller is comfortable with, as well as you. However, both subject to and seller financing are 2 incredible ways to buy real estate with no money down. In recent years, both options became very popular because they provided investors and homeowners the opportunity to buy real estate at a cheaper cost of debt. For example, since September of 2022, interest rates have been above 6% and even above 8% in October of 2023. The last time interest rates were above 6% was after the financial crisis of 2008. So debt has been relatively expensive the past few years. With higher interest rates, primary residences are less affordable and investment properties cash flow less or at all. In this high interest rate environment today, you can buy a property sub 2 subject to the existing mortgage of a mortgage that a seller got in the past at a lower interest rate. So if someone bought their home in 2016 at 3.5% and wanted to sell it to you today, you could assume their mortgage at 3.5% instead of going and getting a loan at today's current rates of 7%. Then you can negotiate the closing cost or down payment with seller financing. And you can negotiate this at a lower rate than current interest rates and save money each month, paying less interest over the next 30 years. This applies if you were to buy real estate with just seller financing as well. Now, when I explain both of these methods to friends or clients, it is about at this point in the conversation where they ask, well, why would a seller agree to these things? And the answer is quite simple. A seller most likely agrees to sub 2, 1, if they can't make the payments themselves and are therefore motivated to sell the property. But that's not always the situation or only reason. When buying a property, many sellers reject and get uneasy when you tell them the mortgage will stay in their name. which is understandable. However, this doesn't present added risk to the seller, because if any default on the payment occurs while you or the buyer are now in possession, the deed will be reverted back to the original seller. So make sure you're able to make all the payments you agree to, but also ensure that the seller has nothing to worry about by telling them that this is the situation. As for seller financing, a seller can sell their property, get the price they are looking for or even higher, and then also earn interest each month and get paid for agreeing to seller financing. So it is a fantastic agreement for the seller, especially if they have no immediate need for the money. With that introduction into creative financing, subto and seller financing, please leave any additional questions in the comments and I'll be sure to answer them. I might even make a more in-depth analysis of both of these strategies in the near future. So I hope you learned a lot from this video, and now you have another tool in your tool belt when it comes to buying real estate. I would recommend you work with an agent who knows about both of these strategies, because it could be the difference between you closing on a property or not. If you would like to work with me when it comes to buying, selling, investing, or developing, I work with clients with all different types of real estate needs throughout Brooklyn, Queens, and Long Island, and my contact information is listed below. I'd be happy to help you. Creative financing is a tremendous strategy that can open endless doors for you when it comes to buying real estate. So I'm happy I finally got to make this video. If you enjoyed it, please like and subscribe to the channel. And as always, thank you for watching.